I'm sorry for your loss. Well, anyone with a sane brain didn't see it coming. I blame Wall Street bets. But again, sorry for your loss. Here you go. Hey guys, welcome back to the After Hours. I'm the ATL Beast, and today we're going to talk about the big boom in the market. One of the things you have to understand is that this week was one of the biggest weeks of the year. We're talking about in penny stocks. Now, when you look at penny stocks, you have to understand anything can happen. And the reason we know that is because we survived the 2020 and 2021 craziness. We're talking about the rallies back in 2021. They had their own name. They were so crazy. Usually they went by meme stocks. And one of the biggest meme stocks that everyone really remembers is GME and AMC. We know GME as a battleground. This battleground was between the subreddit known as Wall Street Bets and the big money known as Tiger Global. With the people in Tiger Global, there's other people at similar levels. There are mutual funds, there's hedge funds, there's all kinds of managers of people's money. And what they do is they go find a dying stock or a stock where they can buy up most of the shares and then short it to the ground, eventually running these nice mom and pop companies into the ground. And when it comes to GameStop, AMC, Bed Bath & Beyond, Nokia, and a whole other list of names, these are traditionally owned by retail. When we look at the war that went on, we see this stock had gamma squeezes, it had short squeezes, it had a gamma ramp. It had all these things that happened on multiple levels. We're talking about the overall price of the stock was in the single digits. It was on its way down into bankruptcy. But before that can happen, the stock went viral. Now, when we talk about the stock, we have to understand this happened individually with each of these companies. But GME is the one that most people knew. It was the brand that everyone recognized. This is where most people had their first gaming experience. This is familiar, and people, they protected it because it was traditionally owned by retail, and they didn't want to be bullied, and they ended up creating their own cult-like subreddit called Wall Street Bets. It also came with its big names. Now, the big names are the influencers. We're talking about the online internet investors, such as Roaring Kitty. They are master marketers, and when they think of who is the enemy, it's people like Ryan Cohen or like the investment group Tiger Global. Tiger Global took a loss a few years ago where they were squeezed out of their mind, and the GME stock went all the way up to $230. And at the peak, some people caught the short. The safest thing you can do is just not trade this. Or you can go trade the sympathy plays, which are a little bit more manageable. They're not directly related to the main play like AMC and GME. You might have something like FFIE. The living consciousness that we actually see as volume goes from the main play into these sympathy plays. And it's a lot more manageable because you're just looking at FOMO and panic and all these other unstable emotions. But they're a lot easier to predict on another stock. And so if you see a run happen, don't expect everything to happen in a single day, maybe even a single week, because some of these happen over several months.
Interested in trading like Steven Ducks? It all starts with choosing the right broker. Ducks Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Ducks Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before, with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
Now remember, the whole reason that we have the stock market is because it's a tool to transfer money. If the company wants to get more money from the public, they want to raise funds, they go put part of their shares into the market and they get that money. But if someone decides that they want to bully that person's public shares by buying it all up and then pushing the stock down by shorting it, they can do that. How it exactly works, I don't really know. But a lot of them do it where they can start naked short selling. This week, we had a sympathy play on FFIE. Remember the profile of Wall Street Bets. They find a company that's going out of business and people don't want it to go out of business, or they just want a playground for the war. And the war is against Wall Street Bets / retail and all these nostalgic and emotional buyers versus big money. The next fight that happened, they found a institution that was shorting FFIE to the point where it was 4 cents a share. And then across all social medias and chat rooms, you see it pumped and it pumped all the way to $4 each day for 5 days, 5 straight days. We saw a stock go from nearly zero to having 1 billion shares each day, and then it ended at $4. Now, when it comes to these rallies and the hype plays, the huge gamma squeezes, they all go by different names. When it comes to these kind of moves, price actions are super volatile. You can make money, but you'd have to scalp. There is no long-term decision in this except going long, because that's where everyone else is doing. And when it comes to if this stock is about to offer, sometimes the offering gets canceled, and that information by itself looks like they're supporting Wall Street bets, and they use it as another reason to make the stock go up. But when the offering actually comes in, all you have to do is scare enough people to where the momentum leaves the stock. But if it leaves it too quick, it's enough to create a support. When it comes to making money on these things, the only thing that you can do to protect yourself is not trade it. And if you do trade it, you want to trade alongside of the crowd. When the panic happens, you have to understand longs are prone to panic, but at some point there has to be healthy pullbacks that create support, and then you make a dash towards a new high. That's what happens with the diamond hands. That's what happens with the new volume coming in. They all have to just buy the stock. We're talking about FFIE had at least 60% short interest. GME had over 90% short interest. AMC, same thing, around 80% short interest. This just means this is going to be the stock that people are going to short into the ground because they think it's an opportunity, but they ended up feeding the rally, and the rally goes to the moon. If you really want to get ahead inside of this type of stock trading, you have to find the main play and play off the sympathy plays. And if you do touch the main play, I'd say buy only. Do it in lottery sizes. Go for 20%, something healthy, and get out. When it comes to short sellers, they always have an arbitrary number based off of their strategy. It could be at a specific percentage, or it could be at a specific number. I only short stocks above $5, $10, $100. If there's a high short interest and there's enough volume coming in, like billions of volume, like we saw on FFIE, but the stock is kind of cheaper, it's below $3. That's enough to rotate the float, enough to go as high as it wants. In other cases, you can see like 600 million on AMC. That's still enough to make the stock go as much as it wants. When you see ridiculous volume numbers like this, you understand the entire retail market is trading the stock. So this is both the overall market and the secondary market squeezing all the short sellers and constantly having people that are holding the stock until this goes to the number in their head. And most people just like solid and round numbers. Like, I want this to go to 100. I want it to go to 1,000. So the only really correct direction when it comes to a meme stock is up until there's a really healthy panic. But that's up to you to manage. You have to wait for the extreme panic to come in. There's some healthy pullbacks that are necessary for a meme stock. But when it comes down hard. But there has to be a legit reason, like an offering. And sometimes the offering could actually be a bait. We're talking about the media, could say an offering's about to happen now. The scare would shock everybody, but it actually might only cause a 20% pullback. But when the pullback goes to like 40%, at that point, you're gonna test the tolerance of the longs. When they lose their tolerance, they panic. And when that panic happens, it hits the stock, it's gonna at least pull back 60%. And you could probably profit off that as a short seller. But do you really want to when there's a constant flow of people trying to buy the dip? I'll leave that up to you. But me personally, it's a little too risky. So instead, I'll go to something more manageable, like the sympathy place. But all right, guys, that's all I got for you today. If you like what you saw, hit the like, subscribe button, and I'll see you in the next video. Peace.